Every so often there's a news story flying under the radar that deserves a closer look. So if it's OK with you guys, I'm just going to go to that special little area in the studio over there to talk about it. Just chat amongst yourselves for a bit.
This is unconventional.
It is.
Yeah.
But as I was saying during a commercial break, Carrie and Rach, I see no valid reason why bodybuilding competitions should be only for overly muscular men.
Yeah, totally.
I've got his cousin in Adelaide. He's always on to me. You should enter them.
You should enter.
Thank you.
I can help you with your tan.
Welcome to Where's Waleed, a handy little explainer of a current sizzling news story, but with me photoshopped into random scenes for your amusement. Well, we're not doing that. Copyright infringement. All right, whatever. Let me tell you about this anyway. This is a story about the near-doomed Chinese property developer Evergrande and what it means for Australia. Evergrande is China's second biggest property developer. Based in Shenzhen, it has around 200,000 employees and more than 1,300 projects on the go across 280 cities throughout China. In recent years, with the local real estate business booming, Evergrande took out loan upon loan, expanding their business to electric vehicles, health services, theme parks, baby formula, bottled water as marketed by Jackie Chan, a football team, and yeah, it also built lots of apartments and sold more off the plan. It was around this time that I got my Evergrande Forever tattoo. How foolish we all were. Because in August of last year, the Chinese government introduced their 3 red lines regulatory measures for property developers. They're measures forcing developers like Evergrande to reduce their debts by selling off their assets. Unfortunately, due to a cooling property market, they have assets that nobody wants to buy right now. Now, this is shocking news for Evergrande because they're in debt to the tune of $419 billion. And to put that into perspective, it's way more than I earn, but not quite as much as Steve Price earns.
Evergrande borrowed a lot of money, and it's probably not going to pay it back.
And as property prices tumble in the smaller cities in which it's invested, Evergrande owes money to staff, suppliers, investors, and has sold an estimated 1.4 million off-the-plan apartments it's expected to build for concerned customers.
We have no hope. We may as well be dead. There's nothing we can do.
This is on top of around 65 million empty apartments already on the Chinese market, a glut caused by post-GFC debt splurge greed, leading to eerie as hell ghost towns.
They've offered to give us property or commercial real estate as collateral, but these are junk properties they can't sell, so we won't be able to sell them either.
With huge cash flow problems, angry investors protesting their offices, and a nearly 85% share price drop, Evergrande is on its knees.
It is rather dire. I think this might be the tip of the iceberg for property sector defaults in China.
Over the past weeks, Evergrande has missed 2 bank interest payments totalling around $223 million, and now has a 30-day grace period to pay or else it's in default. Oh, and there are other pressing deadlines.
Of course, we have more coming up. 3, bam, 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 on October 11th as part of $669 million due by the end of the year.
And on Monday just gone, they had their shares suspended from trading on Hong Kong's stock exchange. It's looking grim. So in the long run, how will this affect the good people of Australia and the bad people of Australia? All of Australia.
Yeah, I'll take it from here, mate. You see, guys, China is our biggest trading partner. If China's economic growth sputters, then that has a huge impact on global growth, and that impacts us. An Evergrande collapse can hit us right in the super.
Yeah, well, the iron ore's obviously got smacked again.
Aussie iron ore is used to make steel. Australia exported $85 billion worth of iron ore to China in the 2019 to 2020 period. We've been on an iron ore gravy train for about 2 decades, and China has built big time. In fact, there's currently enough empty apartments there to house an estimated 90 million people. And now the government's tearing them down if a developer goes bust. So, if China's not building as many buildings, demand for iron ore will plummet. In fact, BHP shares are down 30% in the last 8 weeks alone.
China. They're not just going to bounce back from this and let another Evergrande come along. They're going to try and restructure. And as they restructure, we have to ask ourselves, well, what does the economy look like? What do they need? Do they need iron ore so much? Do they need other products that Australia produces?
Certainly Australian iron ore exporters are going to be watching very, very nervously.
Fascinating stuff. Now onto the topic of overly muscular men unfairly saturating local bodybuilding competitions.
Whoa, hang on a sec, Pete. Just hear me out here first, because all of this comes as China announces it won't be funding new coal projects around the world, which is a huge body blow for another heavily exported Australian commodity. This is getting hectic as. like for us. China's property market is huge. It's worth around $83 trillion. That's around a quarter of their GDP. But for now, their government appears reluctant to bail them out, preferring instead a potential debt restructuring.
We are actually looking at probably one of the most significant debt restructurings of all time.
Many are mumbling about a second GFC, but experts are telling us to chill.
The Evergrande situation seems very particular to China.
I don't see this developing into a global crisis.
Most of what's happening is going to be ring-fenced within China. This is a property developer, not a bank.
Evergrande is not a bank. Its balance sheet, although large for a real estate company, is small compared to Lehman's.
I think they're right insofar as this won't affect the world in a GFC-style implosion, which is nice, but it probably will affect China and us. Having shares suspended from trading is a big deal and suggests Evergrande is on the verge of collapse. I bloody hope it's not. Otherwise, I could be modifying my tattoo to read Ariana Grande forever in my own version of a piss-weak bailout. In both scenarios, chill me to the bone.
With so much content online, it's sometimes hard to keep up with it all. And let's face it, who has the time? The Project YouTube has you covered with the stories that matter. Hit subscribe for a daily list of the news that you need to know.